You're listening to the Topco Business Unusual podcast. Now, the Business Unusual podcast. Learn from the greatest minds in business today. Interviews hosted by Ralph Fletcher. Learn how to improve business, get tips from industry leaders, and be motivated by real-life experience. Topco Business Unusual.
It is so good to be with you on this Topco podcast today, and it's very honorable for me to be here today, and especially with a guest that I have the privilege of speaking to today. And today, very much so, we live in a very different world to what we all know. And I think every country is trying to look for growth opportunities, no matter where they are. And today we speak to Mike Davis. And he, of course, is the CFO of Nedbank. And Nedbank, one of the great friends of Topco, and of course, for many years has been the Nedbank Top Empowerment Conference sponsor, and probably one of the most important conferences on the calendar of events that happen in the year. So it's wonderful to have Mike with us and to focus on a couple of the themes when we talk about growth, and we also talk about COP16, which included in October, and the upcoming COP29. So there's just so much that is happening, so much has been discussed, and we're looking forward to this conversation. Mike, thanks so much for joining us, and it's so wonderful to have you.
Lovely to be here, Leanne.
I suppose a good time to talk about many issues, but I can't help but start up front with talking about what a week it's been. And, you know, this has been one of the most incredible weeks to watch unfold when it came to the US elections and the future of the world as we know it. I mean, what were your immediate reactions when you saw that President Donald Trump is once again going to take that seat in the White House?
Yeah, so it certainly was watched by, no doubt, most of the world. I think the outcome, I think, was forecast, but certainly the lead that President Trump ended up with, I think, was surprised most of the world. But yeah, certainly an interesting development. We'll watch as this unfolds, as he resumes that seat.
Yeah, it really is going to be an interesting time, especially for a world that is worried about sustainability, the world that is worried about the environment. And so, I mean, no matter what way you look at it, this is going to be a different chapter that we enter into come next year. I mean, obviously, we see the transition. It'll be from the 20th of January when he will be sworn in, and that's in 2025. Does it concern Nedbank at all? I mean, this is a big agenda for you. Obviously, a lot of places have got concerns, but one of the big agendas, and particularly when we talk about COP and some of the sustainable goals that have been put in place, is this a little bit of a worry?
I think if you look at what we've achieved globally, whether it be around biodiversity or whether it be around climate change, I think what we've achieved has been too slow. I think we all recognize that this is an urgent agenda, and as a world, we are not addressing or we are not making progress quick enough. And any development across the world, whether it be a US election or any developments elsewhere that potentially would slow or effectively reduce the focus on this agenda, would concern anyone. So let's see how the president embraces this agenda item as he takes that new role or that seat, and we watch with interest.
We do. I think everybody watches this one with interest. But another thing I think we watch with interest is the role of the CFO at Nedbank. And this has been quite a fascinating role, which seems to have a much stronger emphasis these days on sustainability and value accounting, rather than looking at traditional financial metrics. And that's always where, I mean, when you think of financial officer, you would think that is the key role, but it really has been a very, very big shift. When we talk about the environment, when we talk about social and governance principles as well. Perhaps you want to talk about this and where your passion really lies.
So definitely the role of the CFO is evolving and changing. It's certainly moving towards that new acronym, a CVO, or effectively a Chief Value Officer, where we're all looking to effectively build out and effectively measure value creation as opposed to simply financial metrics. So certainly think the role of the CFO has evolved. The role within Nedbank has evolved also if you think about how we've built it into our strategic value unlocks. Nedbank very clearly goes on the road with a particular equity story, and one of those particular value unlocks is very much around sustainability. So it's not only about measuring value and value creation, but it's effectively building it into the way that we run our business, the way we tell our equity story to our investors. And certainly I spend a lot of time on this agenda item as it relates to sustainability and not just climate change, but effectively the suite of ESG. So I certainly agree with you. The role's changed.
It has changed, and it needs to change. And one of the issues, and I think it's an important issue to note, is that as a continent and of course as a country, we are not one of the biggest creators of the problem. However, we're living the problem, and it means that everybody has to have a role in fixing this. I mean, there is certainly a school of thought saying, leave us, let us grow. We're a developing economy. Why do we even have to think this way? Perhaps from your opinion, I mean, you worry about the bottom line and you do worry about growth. But at the end of the day, the school of thought that says, why must we be concerned? Leave it to the ones that are actually causing the damage. We're causing very little damage in comparison. What do you say to the critics?
So I think the problem statement, I think you've just nailed it. The fact that cause and effect sit in different jurisdictions, and the fact that timing is not immediate is the reason why we sit with this particular dilemma. So in other words, to your point, the biggest agitators for effectively climate risk or climate change don't necessarily sit with the biggest consequence. And my reference to timing is that often the cause doesn't translate into the immediate outcome. And for that very reason, we're battling to get traction from a world perspective in addressing the issue. And if you think about the developed market, which typically is the biggest cause of climate change, and if you think of emerging markets, which typically bear the largest brunt of climate change, they're two different jurisdictions. And as a result, you often battle to get traction in resolving climate risk or climate matters because of the cause and effect are not directly correlated. So, we as South African, I think we as Africa, we bear the largest impact or one of the largest impacts of climate change. We don't necessarily have the finances, certainly across Africa, to address climate change. Yet we do have a role to play in terms of addressing climate change. But yeah, I think your question is very valid. And it is one of the reasons why we battle to get traction as a world.
It is. It's very, very true. But there has to be a change of behavior and a change of thought. And what fascinates me is that Nedbank has always been on this. It's always been known as the Green Bank, and not because of the color of its logo, but also due to how you have always gone about business strategies that support and protect the planet. I mean, that has been your call from as long as I can remember. How far does it go back? I mean, if we have to look at the history of Nedbank and the embracing of the environment and always being that green bank, when did it all start?
Yeah, I think it certainly lives with us for a long, long time. I mean, it really started with our relationship with the WWF a long, long time ago. And off the back of that, we've always embraced, whether it be biodiversity more recently in the release of our nature position statement, but certainly climate change has always been something that Nedbank has concerned itself with. And it is something that we talk about business unusual, but we've certainly looked to make it business as usual. And it's certainly something that I drive across our frontline businesses that climate change, biodiversity, finance solutions for either biodiversity or climate change shouldn't be seen as something that our frontline businesses do over and above business as usual. They should embed that in their businesses in the way we do business. And that certainly is something that we've approached as an organization for a long, long time. And that's why it does sit at the heart of our purpose, and it does sit as one of our strategic value unlocks and makes up a big part of the equity story in terms of Nedbank.
Yeah, it's always nice to be ahead of the curve. It really is nice to be ahead of the curve. And as you say, this is business as usual for you, because this is something that you already positioned yourselves as a brand for. But what I find quite interesting is that you've just published your first nature position statement. What is that all about?
It's really about, it's taking, if you think you go back a bit, we started with our climate position. We then moved on to effectively within that, we released our energy policy back in 2021. We've now released effectively our nature position statement with effectively a bigger focus on effectively nature, biodiversity, and not just climate change. So it's really an extension of where we started from a climate perspective into energy and effectively into broad-based nature and or biodiversity. So it felt like a natural progression for us to effectively work on and release a nature position statement. It's not perfect, and it's something that continues to evolve. And you'll see when we come to market at the end of this year, we've made slight changes to that position statement, and it'll continue to evolve as it, again, provides guidance to the way that we run our business.
I love the research report that you released, and I think it was the end of October that you did this, but the Bloomberg NEF found that biodiversity finance, which it defines broadly as a financial flow towards the preservation and restoration of nature, stands at $208 billion a year, up from $166 billion just 3 years ago. Speak to me about this and sort of Nedbank fitting into all of this.
Yeah, so it starts to size, whether you think of it as the size of the prize or the size of the problem. The bottom line is we've got to deploy finance into the area of biodiversity if we're serious about effectively protecting nature in its current form. And I certainly like to think of it more as the size of the prize as we look to build out appropriate finance solutions to support this particular agenda item. And I think that number of 208 is probably understated and probably is a lot larger than that.
I would imagine so. I mean, when we look at certain frameworks like the Paris Agreement and the biodiversity targets that were set in Montreal in 2022, how do you align yourselves with them? I mean, how does a normal person listening to this understand how a bank aligns themselves to this kind of issue and a major issue? Perhaps you can kind of clarify this and tell us how you do it.
So bank is in a very special position to effectively play its part in this particular agenda item. If you think about a bank, we don't make widgets, we don't make motor vehicles, we don't make boxes. We're in the provision of financial services. So effectively, we direct capital into areas that effectively either build out, in this case, funding solutions for the resolution of climate change, or in the case of biodiversity, or into nature. So we're in a very unique position to provide these financing solutions to support this particular agenda item. The way that we look to embed that and build that into our businesses is effectively we've built out specific targets across the Sustainable Development Goals, and we support that through funding into whether it be agri, renewable energy, water, sanitation, education, SME funding, etc. So the way that we consider, think about, and build this particular agenda item into our businesses is through specific targets as they relate to the SDGs. And maybe we'll spend a bit more time on that just now in terms of where we're looking to focus. But that's how we think about the size of the prize and the opportunity in the space.
And such an important discussion that we're having now, because not certain, obviously, when people will be listening to this, but they may be listening to it when COP29 is taking place, or it has taken place, or we're in the middle of it. So, either way, this is a very big talking point. And I know that this is going to be taking place in Azerbaijan. In terms of Nedbank's, and this is going to be the finance COP. Talk to us about Nedbank's involvement. Will you be attending?
Unfortunately, I'm not. I'm in the UK with investors from the back end of next week. We do have representation at COP29, and I think it is an extremely important effectively meeting given the focus on finance. And this meeting has got to be all about finance, finance, finance. It's about unlocking finance opportunities to start putting money and effectively investment into finding solutions as it relates to climate change. So, yeah, I think it's an extremely important meeting. We will be represented at COP29, and I certainly look forward to feedback and the outcomes from this particular meeting.
Yeah, I mean, when you read about this particular meeting, it feels like so much is resting on this particular gathering of heads of financial minds, and they're calling this one a litmus test for the world's commitment to financial mobilization for climate action, because this does take money. This takes a lot of money to make it work and to allow the world to actually move in this direction. But not only money, it takes a desperate form of commitment as well.
Yeah, and I think that's why you'll see that there no doubt will be over 200 countries represented. There'll be probably somewhere around 40, 50,000 attendees over that particular period. So I think it's going to be well attended. Your point around, it takes money, it takes finances, it takes solutions. It is all about financial solutioning. How do we structure project finance deals? How do we effectively develop green bonds? How do we come up with affordable credit solutions to make these things work? And, there is no doubt it will require both government and the private sector to join effectively at the hip to get some of this across the line. You need to look to governments to effectively create the legislation, the regulation, the policy to facilitate solutioning. And you need the private sector to, again, with government, come up with appropriate funding actions, innovative solutions, effectively to support these particular outcomes. But it takes money, it takes finances to effectively get some of this across the line. So hence the reference to COP29 being the finance COP, I think is appropriate and relevant. And again, let's see what we can get out of it.
As a continent, obviously this is a continent that is rich in minerals. It's rich in wealth in terms of that. But these are also abused, unfortunately. But the reality is that, when I look at sort of industries that are very high emission businesses, I'm not sure they're as serious about it as a financial institution as yourself. How is and that's a very sort of a big statement that I've made, and I don't know if I'm wrong in this one, but it feels sometimes that businesses such as Nedbank, obviously you're not a high emission business, but you are obviously in charge of financing and all of these kind of things. How do we strengthen the messages to these massive industries that are creating problems and that do not want to be a part of things like COP and are not committing and doing what is needed to, in essence, save this planet the way we know it?
I think banks got a very important role to play. And if you look at the way it's going to play out, it's going to play out in, first and foremost, banks like ourselves deploying more and more capital and balance sheet into, for example, renewable alternatives, or effectively alternatives that emit lower levels of effectively carbon. So you're going to see banks doing more capital and deployment of balance sheet in one direction, and you're going to see banks doing simultaneously lower levels of capital deployment into high emitting areas. And if you look at what we released in our 2022 and 2023 annual financial statements and integrated report, you'll see that we've now put out specific glide paths as it relates to effectively our financing of fossil fuel related industries. So think thermal coal, oil and gas, and power generation. We've committed to effectively a glide path across all three, thermal coal, oil and gas, and effectively power generation. That will lead to less or lower levels of financing going into fossil fuel. At the same time, we've indicated we are doing and looking to deploy 20% of our balance sheet in gross loans and advances by the end of 2025 in the form of the Sustainable Development Goals. Now, that's an ambition, but it does talk to more of Nedbank's balance sheet moving towards effectively the Sustainable Development Goals and less of Nedbank's balance sheet making its way over time into exactly your reference to the industries that don't necessarily support a move away from, for example, high emissions. So that's the way it's going to play out, I think, across the world in most banks. We're going to be doing more of one and less of the other.
One hopes, because I do think this is imperative. I mean, I just have to think about some of the repercussions. And I mean, you look at what we were watching taking place, so a few weeks ago or last week, again, time dependent here when people are watching this. But those storms that we saw in Valencia, in Italy, I mean, that's unprecedented. And I suppose you can, and rebuilding an entire city, building people's lives, the loss of lives, the damage that we are seeing created. I'm now speaking off the continent, and that's more of a developed world. But once you see that happening here on the continent, in order to rebuild that sometimes never happens. And you just see derelict areas that are never inhabited again because we can't afford to rebuild it. And I mean, we see that here at home in some provinces like KwaZulu-Natal, where we've seen adverse flooding, where we've seen droughts, where we've seen the dire effects of really an environment that is being hammered. And if we don't all put this at the center of our intentions, who knows what we're leaving this world, the state when we go, what our children and great-grandchildren are going to have to deal with.
I mean, Leanne, if you look at the examples you've referred to, I mean, anyone who thinks climate change is not real, I think they've just got to watch the news for a couple of days. The flooding you've referred to, both here in South Africa and the floods we've seen across the world, the tornadoes, the high winds. I mean, climate change is extremely real. And to your point, if you look at the examples used, it is starting to have a direct impact on the developed world as well. So again, I think that COP29 will be very successful because I think more and more of the participants who will be at COP would have lived or experienced some form of the impacts of climate change, and I think it's just going to get worse.
And I think, Mike, it is getting worse on a daily basis, and one does hope that when the top leaders and the top minds are gathering, that they'll have these intentions and even stronger intentions going forward. And perhaps maybe it's a good time to ask you, as a bank and as an institution that's very serious about this, what are you hoping that will be achieved out of COP29? We can't afford talk shops right now. We need absolute commitments.
We need commitments. We need tangible outcomes as it relates to financial commitments, and we need effectively to walk away with a mandate to build out appropriate financing and funding solutions to move this agenda forward on a 10x type basis. To your point, we can't come out of COP29 with loose commitments, effectively simply a dialogue. We need tangible financial solutions to move this agenda item forward.
Just finally, in terms of, and I'll pause the conversation on COP because I'm quite excited to see the outcomes of this. But in terms of your working relationship with government, with obviously South Africa's government, I know you have representation all over the continent and expanding at a rapid rate, but perhaps maybe just focusing here on South Africa, where we are speaking, the relationship and the commitment from our government, from South Africa's government, are you confident that they're very serious about this?
If you look at, if we take two particular matters, which obviously closely correlate with climate change and or effectively biodiversity would be, let's take renewable energy, and obviously the catalyst for us to build out renewable energy alternatives has been the lack of supply of power in South Africa, but it's achieved the objective of effectively addressing and moving away from high emissions intensity as we migrate towards renewable energy as opposed to thermal coal, oil and gas. So, I think if you look at government and the private sector and how well we are working as it relates to building out renewable energy alternatives, I think you could see a lot of evidence of that. And I think you'll find, given the relationship with the private sector, watch the space. You're going to see that continuing to progress in the right direction as we move more of our energy supply towards renewable alternatives. And then the second big catalyst, and again, this is reasonably new and young in terms of public-private partnerships, but it's in the water area. We've got a massive issue coming with regards to our water infrastructure. And again, if we can replicate what we've been able to do between the private sector and the public sector as it relates to energy in water, again, I think we can make tangible and quick progress in the water agenda or water space. And both of those talk to this particular agenda item. So let's replicate what we've done through NECOM and in the energy space and the water space. And we'll make good and strong progress.
Absolutely. I'm glad you mentioned that, because that is, I think, of utmost concerns for many. When energy is something we've begun to work around and learned how to work around. Water, however, this is serious issues, and I'm glad that's been addressed as a matter of urgency. I also wanted to talk about when you look at us as a country, and we've, as much as we speak about elections happening all over the world, this year of 2024 has been absolutely unprecedented. And people all the world around have asked and begged for change. That is what people are asking for. Whether we look at here, we look at Botswana, we look at Mozambique, we look at what's happened in America. I'm just naming the few that have just gone through elections, including ourselves, where we came out of it all with a government of national unity, and we are hoping to address issues that citizens are concerned with. And I think the biggest problem is the lack of growth in this economy and rising unemployment and poverty. Now, in order to work around that, I know that Nedbank is also one that stepped up to the party and particularly looked at something along the lines of the sustainable development finance. Because when we look at financing business, getting SMMEs into the workforce and into the economy, this always seems to be a problem. Talk to me more about this SDF and the role it plays in trying to help smaller businesses. Smaller businesses are the heartbeat of a country and our struggle.
They certainly are. And if you look at what we've done as Nedbank and the way we've looked to construct the equity story around the Sustainable Development Goals, or effectively our commitment to sustainability, has been to put an ambition out there that says, as we were talking to just now, we want to get 20% of our gross loans and advances into Sustainable Development Goals. So what we've done is there's 17 goals. We've taken 9 of those particular goals, and we've effectively set targets as it relates to lending into whether it be renewable energy, water and sanitation, education, SMEs, affordable housing, etc. So we've got very distinct commitments in terms of targets. We've pushed those into our frontline businesses to give them effectively ownership, and we're driving balance sheet into effectively the SDGs through SDF. So, and we measure that. We've made, again, the ambition around the 20% mark. We were effectively at 16% at the end of 2023 at 145 billion. It's sizing our loans and advances portfolio by the back end of next year. It'll be over or through $1 trillion. So you get a feel for the size of financing we'll have into the Sustainable Development Goals. And, along with that comes the sustainability agenda. If you look at our commitment towards SMEs, we drive those particular initiatives through our RBB business. We look to support our SMEs, because as you indicate, they're an extremely important part of driving economic growth through the economy. And you're 100% right. If we're going to have a chance at reducing unemployment, inequality, and poverty, we have to get the South African economy to grow. Growth sorts everything else out. Growth leads to effectively higher tax collections, which sorts the fiscus out. It leads to higher levels of employment, which reduces poverty, inequality, etc. So we have to grow. And to grow, along with the Sustainable Development Finance initiatives, you get the benefit of A, supporting the sustainability agenda, and B, you get to support economic growth, which, as indicated, addresses, again, unemployment, inequality, and poverty.
I mean, I'm reading about, but these are stats coming from last year, 2023. I mean, Nedbank supporting over 305,000 of these businesses that you're talking about, the small businesses, through your retail relationship banking services, providing 4 billion rand in asset payouts to drive this development in the SME sector. I mean, this is massive, no matter which way you look at it. And I'm hoping it's grown once you tally up what this year has seen.
It certainly continues to grow. I mean, they're an extremely important part of our business. And again, not only from a sustainable development finance perspective, but obviously we support our SMEs across other segments. But yeah, it continues to grow.
Great. I'm happy to hear that. That's a good news story that needs to be put out there so people can actually know. You have spoken so much, and I can see how passionate you are about the SDGs, the Sustainable Development Goals, and I think any business should be very committed to this. It's vitally important. The problem is whether we reach those targets. It's not looking positive. It really isn't. However, it doesn't mean we stop. And I know that you mentioned you've taken on many more of the 17 SDGs, obviously, but you have prioritized 9 of them. You did say that, but I want to talk a little bit more about the 3 primary focus areas: sustainable finance, financing transition, and financial inclusion through the products and services. Perhaps you want to speak to those and also find out how they're going to help the focus SDG points.
Yeah, so as indicated, I mean, we are focusing on 9. The most traction we've seen has been across renewable energy, agric, and SME, as we've discussed. We are seeing growth and opportunity, further growth and opportunity in water and sanitation, education, and affordable housing, although affordable housing has been slow, just given the slower growth that we're experiencing in the South African macro. But, we focus on all 9, but as indicated, water, affordable housing has been slow. I do expect water and sanitation to pick up. We recently landed a large deal on a water articulation project. So, watch the space. We'll keep pushing water, sanitation, education, and affordable housing.
Yeah, important, very important aspects. But, South Africa needs an additional $277 billion annually to close the financing gap for climate action. Funding is only meeting 11% of this requirement. Where do we pull this money out of? How do we do this?
Yeah, I think it's ongoing initiatives like COP29. It's getting all stakeholders at the table, which will happen between the 11th and the 22nd of this month. It's the points you and I were discussing just now around, landing tangible financial product, credit solutioning off the back of that leads to effectively, moving the amount of financing up from that 11% you quoted to a number that starts to make a real difference.
We hope so. And, one of the other issues, and again, this speaks to these SDGs, and it would be good to hear what Nedbank does in terms of one of the big problems of skills development, because, within South Africa, we talk about this unemployment rate, but it's particularly amongst the youth. And that is one of the biggest things. In terms of skills development, I'm gonna start with that. How does Nedbank assist there?
Yeah, so we've got skills development targets within our organization, so that talks to our staff complement, and obviously through financing of solutions around education, or effectively what we're doing around smaller economies, smaller businesses, partnering with effectively our smaller clients in that SME space. We're doing a lot both for our clients and for our staff. And I think, South Africa's got, as we know, a significant problem around education. And that does talk around effectively SDG 4 and what we can channel into specifically into education as it relates to Sustainable Development Goal 4. So South Africa is very complicated as it relates to high levels of unemployment, leading to obviously to effectively issues around education, issues around development. But again, the sustainability agenda does create opportunities for new skills that we can develop along with sustainable development finance initiatives.
Live in such a dynamic world, in such a fast changing world, and being on a young continent, one would think that this obviously is the skills we need to focus entirely on for this new world that we live in. However, the reality is, and again, I know that this has been spoken about because, having been at your at the empowerment conference that was held earlier this year and every year, which is fantastic. One of the big speaking points was gender equality. And, I suppose it is important to speak to you as one of the leaders of a major bank that employs a lot of people. That gender equality, it's one of the top SDGs as well. What does Nedbank do in this field?
So if you look at gender equality and you look at, it starts at the top. We've got specific targets and effectively ambitions across right from our board as it relates to gender equality, or effectively metrics. We roll that through our group executive. We roll that through our respective mancos, divcos, and into effectively all levels within the organization. And then we flick that around and look at that across senior management, middle management, junior management. So we have very clear targets, very clear ambitions to ensure that we create gender equality across senior, middle, and junior, and across board, executive, manco, divco, etc.
I know we're running into the end of the conversation, which I've enjoyed thoroughly, and I suppose it's been a big learning curve and one that's vitally important. I mean, let me ask you to look back a little bit. 2024, how would you describe it? I mean, for you and for a business, what's it been like this particular year? I know how I would describe it, but I would love to know how you would put this year into words.
Yeah, so I mean, if I think about it from a financial perspective, obviously you saw, we all moved through quarter one. We all then went through a very slow growth period into quarter two, largely as a result of most individuals and businesses waiting for the outcome of the election. We then saw a reasonably strong month of June post the election, and you referred to the Government of National Unity. I think to come out of that election process, to establish a Government of National Unity as quickly as we did, and effectively to bring more political parties to the table and strengthen the leadership team at the table, I think was a remarkable outcome for this country. We then moved obviously into Q3. We had all expected Q3 to see stronger levels of growth that didn't necessarily translate. You've seen a number of green shoots off the back of the establishment of the Government of National Unity, but not necessarily at this stage translating into balance sheet growth. And, you've seen foreigners, they've stopped selling South African bonds and equities, but they haven't necessarily started buying South African bonds and equities. So I think there's still a lot on the fence, still looking for tangible proof points around the benefits of the Government of National Unity. I do believe they will come. I do believe we'll see a stronger close to the year, and I think that you'll see that momentum will carry into 2025. But certainly lots happening in both the macro and political environments.
I've never seen a year quite like this. It's been one of those years that I think when we clicked in on to the 1st of Jan in New Year, we knew we were in for something. And boy, did we get something. And we're still getting something. This year just won't let up. It's absolutely crazy. However, let's look to 2025. Obviously, you've got your vision glasses ahead. Nothing is ever totally predictable, but are you feeling more optimistic going forward?
We certainly are feeling more optimistic. I think you'll find that having gotten through the election was a huge step for this country. I think that when you reflect on, CDS spreads, when you reflect on bond yields, recent strength in the rand, recent strength or repricing in the equity markets, I think that momentum will run into 2025. I think we'll see slightly stronger levels of GDP growth. I think the benefits of interest rate cuts, which we are expecting a further cut this month, and then 3 further cuts into 2025, will obviously help the consumer, and that on its own should stimulate higher levels of growth. We obviously haven't had load shedding for the better part of 6 months, which again on its own should support stronger levels of GDP growth. But we are cautiously optimistic into the back end of this year and into 2025. We need the GNU to hold, and we need to continue to leverage the benefits of that particular relationship.
And certainly one thing we do need to fix up are the ports of entry in and out of this country and get the exports and imports back on track and working, because these are key drivers of the economy. And as we speak right now, looking at borders closing around our neighboring countries, stability within Africa, we are increasingly dependent on that, and we can never downplay that, I suppose, and especially with you as business interests in so many different African countries. That stability, it is vital, and it's something that we constantly need to focus on and work together with our countries that we share a continent with. So
you're so right, Leanne, and it is concerning, some of what we're seeing play out in some of our neighbors. So we're obviously watching that very, very closely. And you do raise a very important point with your reference to the ports and fixing the ports. And it's not only the ports, it's logistics in its entirety. So it's, how do we move commodity around the country? It talks to road, rail, and ports. We seem to have and are leveraging the benefits of having fixed our energy issues for the moment. But we're also cautious there because obviously our energy solution is supporting probably 1% GDP growth. If we're expecting stronger levels of growth next year, do we have the energy supply to support stronger levels of growth? But you're 100% right. It's logistics in its entirety that we need to fix. And then your reference to, again, some of our neighbors at the moment is very concerning. If I just take Mozambique, for example.
Big worry, big concern. Listen, this was never, ever going to be easy, but that is what makes this such a gem. It really is. The opportunities are alive in every direction we turn. And we thank you for putting, I suppose, what's really important at the top of your agenda. It's looking after our climate, looking after the environment, looking after people that are wanting to make their mark on this earth. And let's keep the earth the way it is. Listen, it's been an absolute pleasure talking to you. And I thank you so much for joining us today.
Absolute pleasure, Leanne. Thank you so much.
Good. Have a wonderful, I hope you get to have a break. And we'll touch base in the new year, and I'm going to hold you to some of your predictions. Mike, thank you, CFO of Nedbank.
You're listening to the Topco Business Unusual podcast. Now, the Business Unusual podcast. Learn from the greatest minds in business today. Interviews hosted by Ralph Fletcher. Learn how to improve business, get tips from industry leaders, and be motivated by real life experience. Topco Business Unusual.